It's great to have you both here. So, Todd, I'll first ask you, why the large number of shutdowns?
I think there's two main drivers that are happening here. We saw some consolidation in the ETF industry. Invesco made a couple of deals in prior years, and they've really pruned their lineup to make room for other offerings, as did iShares and WisdomTree. The second factor is because of volatility that you mentioned earlier, leverage and inverse ETFs, that's a real bad environment for them, particularly if you're focused on MLPs or oil. So we saw a number of these leverage and inverse products shut down. This is a niche part of the market, but more exciting what we're seeing that's launching in ESG, in thematic, and in active. And we're going to have possibly a record year for ETF.
I think his shot froze. We'll go right back to it. But Elizabeth, let me bring you in, because the way that Todd was describing the ones that shut down, the ones using leverage, their inverse ETFs and so forth, I mean, is this shakeout a good thing?
So, I think in many cases, turnover in the ETF industry is quite healthy, especially when funds that aren't sustainable go away. It means that the rest of the options are a little bit more stable. At FactSet, we provide a fund closure risk where we rank at low, medium, high the chances that a fund will close in the near future. And, one thing that we've done recently is all of our exchange-traded notes are now rated at least a medium and possibly a high, because in addition to all of the factors that Todd mentioned, we've also seen a real rash of closures of the exchange-traded notes.
And what does that say to you, Elizabeth?
It says that the banks that issue them are having second and maybe third thoughts about the effect on their risk desk and their balance sheet. And a lot of banks are saying no thank you to the ETN business.
That's very interesting. So, Todd, I'll turn back to you. And you were saying, there are some big things happening in the ETF world this year. You mentioned a lot of these ESG funds, environmental sustainable governance focused funds was one of them.
Yeah, so we've seen iShares in particular, but other firms that have been rolling out new ESG products, we're seeing strong year for ETF demand off of a very small base. We're also seeing what's exciting is actively managed ETFs, both fully transparent and semi-transparent. So we have Fidelity, T. Rowe Price, American Century, and ClearBridge that have launched these products. And then lastly, thematic ETFs. So we've seen Direxion launch in a couple of products. More recently, Global X has expanded their lineup in response to the current environment. So telemedicine, working from home ETFs. These are some of the new themes. This is where the puck is going to, and the asset management industry is really skating towards it.